Welcome to the Litigation Podcast Series. This podcast will address Gap Auto Insurance by James J. Franklin, attorney at law. Mr. Franklin is a member of the Litigation, Transportation Distribution and Logistics, and Personal Injury Groups at McNees.
Imagine this situation. You're driving along the highway, you're not doing anything wrong, but you're involved in an accident. You're okay, thankfully. Everyone else is okay as well, but your car is damaged. What happens? What's your insurance company going to do? Are you going to be out of pocket any money? Can you afford a new vehicle with the money you get from your insurance company? I get these questions every day. So let's run through this general situation when it occurs. Many insurance policies in Pennsylvania have collision coverage. Now, collision coverage applies to your vehicle if it's damaged in an accident. So let's imagine you're in an accident, damage to your vehicle, you have that coverage. You inform your insurance company. They're going to send out someone to look at the car and assess the value, assess the damage, and assess the value of the car. What's it going to cost to repair it? What's the car worth? Now, if the cost to repair the vehicle is a lower amount, it's not too much, then they will indeed have it repaired. And they will either send you a check for the cost of that repair, or they'll send a check directly to the auto body. Now, you may have to, of course, pay any deductible that you have on your policy. If the cost to repair the vehicle, though, exceeds its market value, then they're going to consider it totaled. They're not going to pay to have it repaired. Instead, you're going to get a check for under most policies, the ACV, or actual cost value of the vehicle. Now, actual cost value, you can think of it as market value. It's a complicated formula, but it's similar to Kelley Blue Book value. It is not replacement value, so it's not going to necessarily be the amount of money you would need to buy a replacement vehicle. Instead, market value is based on several factors, including age of the vehicle, make and model, mileage, any upgrades you made to the vehicle. Again, many people are disappointed when they get that ACV amount, though. It's lower than they thought, it's not enough to buy a new vehicle, so they're going to be out of pocket. So what can you do if you're in that situation? Well, if you already had an accident, you need to make sure your insurance company has all relevant information and up-to-date information regarding your vehicle. Now, of course, they're already going to know the make and model and year because it's insured under the policy. But you want to make sure they know if, let's say, you put new tires on the vehicle, or you recently had it painted or detailed, or made any additions to it. Make sure they know if it's reliable, if you've had it regularly maintained, regular tune-ups, regular oil changes, anything that would increase the value of that vehicle so you can make sure you truly get its market value. Now, if you haven't been in an accident yet, but let's say you just purchased a car and you financed that purchase, so you have an auto loan, you want to see if gap insurance would benefit you. Gap insurance covers the difference between the loan on the vehicle and its market value. We all know as soon as you drive a car off the lot, its value goes down, but you still have that higher car loan. If you don't have gap insurance and you're involved in an accident, you can be personally responsible for that difference. You still owe the bank for the car loan. Gap insurance can cover the difference. So it's something you may want to look into if you're in that situation. The Transportation, Litigation, and Personal Injury Groups regularly assist clients with motor vehicle issues. If you would like more information on this topic, please contact me using the information on the screen. Thank you.